Welcome to this episode of ACG's Growth TV. I'm Katie Mulligan, and I'm joined today by my guest, Jamie Elias, a partner at private equity firm Trivest Partners, which focuses exclusively on founder and family-owned businesses. Jamie has been with the firm for 24 years, is a member of the investment committee, and he also oversees the firm's non-control investment strategies through the Trivest Growth Investment Fund that we're talking about today. Jamie, I want to ask you first to talk about the growing interest among private equity firms in taking minority positions. We're seeing this more and more, and Trivest, of course, has a dedicated strategy around this with its TGIF funds. So can you tell us about why non-control investing was an area where your firm saw an opportunity?
Sure. Thank you, Katie. At last count, there were approximately 3,000 private equity firms out there, and I would say the vast majority are in search of controlled transactions, namely where the PE firm takes more than a 50% ownership stake in a target company and more likely 80, 90, or even 100% ownership. At Trivest, we see thousands of incoming investment opportunities each year. And around 8 or 9 years ago, we started to track the reasons Trivest chose not to pursue a founder or family-owned business after that initial meeting. And surprisingly, there was a growing subset of founders who articulated they were not interested in selling the business outright at that time, but enjoyed our conversation and wanted to, quote, stay in touch. Now, granted, when Trivest would hear that from an owner of a company we liked, we would try to convince the founder to sell us 51% of their company, but it actually never really worked. When an owner is not ready to sell, they are not ready to sell from our vantage point. And oftentimes, the real reason the owner wants to hold off transacting was a sense that their business was just growing too strongly. They worry that they would be leaving too much money on the table by cashing out. So we have these great organically growing businesses that Trivest would habitually just walk away from politely because we had this hard and fast rule that we had to own 51% or more of a company and thereby control all of the decisions making in a particular business. So around 2015 and into 2016, we studied the market and realized that there was a real opportunity to raise a dedicated non-control fund, which we call the Trivest Growth Investment Fund, or TGIF for short. Most of what we saw before we actually raised the TGIF flag were confusing, non-transparent offerings to take a minority stake in a business. But when you look at these term sheets, you'd frankly get a headache. And these instruments look more like debt offerings than true equity investment. And then finally, I'd say that there was a preconceived notion about being a minority investor in a privately held company, mostly negative from the investor standpoint. And we just have not found that to be the case with TGIF.
And so what has the response been from business owners when you talk to them about this non-control offering?
Yeah, I mean, I'd say most of the time it's like, where have you been my whole life? Honestly, most business owners don't really know this non-control option exists. I would say most are aware of the second bite of the apple concept, but many business owners just assume they need to, quote, sell a majority of their company when they transact with a private equity firm. The TGIF offering can be explained to a business owner literally in less than a minute and in a simple and straightforward manner, which really seems to resonate with these owners. We started making non-control investments in late 2016, and the reception from the market, both intermediaries and founders of businesses, I would say has been extremely positive. And to that point, over the past 5 years, we've made 37 investments within TGIF. More importantly, nearly half or 18 of them were new platforms where we took less than a 50% ownership stake, and the balance, or 19, were add-on acquisitions. And as we sit here today, I would say the pipeline is extremely full, and we have an additional 8 TGIF businesses under letter of intent as we sit here today.
So it sounds like this is going over really well with entrepreneurs. From Trivest's perspective, What makes a business a good target for this particular strategy?
Yeah, it's an interesting question. I would say that control, and I did control investing for 18 plus years, and control investing is actually more straightforward. When a business owner or a founder reaches that point to sell, I'd say typically as part of some sort of life or estate planning transition, everybody knows the drill, right? There's a debt and an equity component to getting a deal done, and that equity component is what gives rise to the capital deployment opportunity for a PE firm. With non-control investing, it's really all over the map, and there are just more ways and interesting ways for TGIF to get money to work in these great privately held businesses. I'd say some owners, the majority, want to take some money off the table, but not all of it, and I call that the partial cash out. Others want to buy out a passive shareholder who's no longer adding value. Some want to use the capital to pay down debt. Others might have a specific need to, buy equipment to pursue a very tangible and oftentimes forceful growth opportunity. And all of these situations or fact patterns give rise for an opportunity for our TGIF fund to invest. And then to answer your question more specifically, the nearly 20 platforms that we've completed in our non-control strategy have one overriding characteristic, which is growth. These companies are in an array of sectors, typically have $5 to $35 million of EBITDA, but they're growing so fast, and these business owners aren't dumb, and they feel like they want to get the business to the next level before that next monetization event. And so we come in there and ride alongside these great businesses for, say, a 3 to 5 year period of time and help get them to that next level and position them for that premium exit at the time of their choosing. And for me, the interesting part is that, the pre and post closing processes are the same, whether Trivest takes a control or non-control stake in a business. And we have other funds that take control stakes in businesses, as you know, Katie. And the one thing that is different in the non-control investment is we're not using third-party debt at the time we make that investment. But once the money goes in, regardless of our ownership level, Trivest has a proprietary methodology to build value, which we've dubbed the path to 3x, which namely is our goal is to triple the value of a business in a 3 to 5 year period of time. And we show our founders our track record of achieving this, which makes the non-control offering all the more compelling, because if Trivest or our TGIF team manages to do their job and actually triples the value of a business, the founder, you could say, disproportionately benefits, as he or she were smart enough to hold on to more than 50% of the ownership at the time of their transaction with our TGIF fund.
Mm-hmm. And you mentioned earlier the strong pipeline for TGIF. So I wonder if there's anything else you can tell us about what's next and where you go from here.
Yeah, I mean, it's, as I think back to 5 or 6 years ago when this was on the drawing board, I would not have imagined that TGIF is now one of the fastest growing parts of the Trivest business. And we think of ourselves as running a business, not a deal shop, but it is one of the fastest growing parts of our business now. Our debut fund, as I mentioned, in 2016, $225 million of capital. We invested those funds in less than 4 years into over a dozen platforms. And Fund 2 was in 2020, and that fund was double the size of the first one at $450 million. And we're going through that capital at a pretty rapid clip right now as we sit here in 2022. And going forward, we continue to look for opportunities where we can write a meaningful check. And by that, for me, that's about a $25 to $60 million investment from a TGIF fund in a business that we classify where the owner says they are not ready to sell yet. And the yet being the key in that phrase. And we now, being that we've been in business within TGIF for a number of years, we have the case studies to show founders where we took a minority stake in their company. And down, I call that the appetizer round when we first buy 20, 30, 40% of a business. And then we help that business owner sell the company down the road, or the main course in my poor restaurant analogy, at significantly elevated valuations after Trivest applied its 4 decades of experiencing professionalizing founder-owned businesses and implementing that path to 3X, which can be found on our website.
All right, great. Well, we'll wrap things up there for today. Jamie, thank you so much for joining me on Growth TV.
Thank you very much for having me.